Welcome back to Indianomics. My special guest today is the Managing Director and CEO of IDFC Bank, Mr. Rajiv Lall. Mr. Lall, a lot has been spoken and discussed about the possible impact on real estate with no firm answers. But on infrastructure, do you think, construction also pays a lot of its money in cash. A lot of cement, we understand, is bought in cash. Do you think this sector is dislocated?
Well, in infrastructure, it depends what segment you're talking about.
Okay.
So the
road
most
building?
obvious one that has been, so the most obvious one that's been affected is toll roads, right? Now, the entire transport industry relies very heavily on cash. And these people either don't have the cash or, anyway, they're temporary dislocation.
By law need not pay.
Which means that government have decided that tolls need not be paid. Now, whether this loss, I don't know how long this loss will last for. Is it a few weeks? Is it a month? Is it 2 months? If it's an extended period, is this loss going to be made up somehow by government? No clarity.
Okay.
But if it's not made up, then this will affect the debt servicing capacity of concessionaires who are managing these toll roads.
What about road constructing companies, sir? Besides the toll income, doesn't the road construction business itself require cash?
Yeah, so, one of the issues so I was talking to somebody in the real estate business or in the construction business more generally, it will apply to road construction as well, is that the middle-sized contractors and the subcontractors do not find themselves short of cash to pay the daily wage of workers. So workers are having difficulty, they don't have the cash to buy the daily rations, right?
Yeah.
This is a major stress point. So again, the deep-pocketed guy, so the subcontractor goes to the bigger contractor. The bigger contractor, if he has deep pockets, he's saying, okay, look, we cannot tolerate this. Here's some money. You take care of these people, and we'll figure out if ever we recover this or not. But there is a part of this problem is caused by misinformation and fear.
Absolutely.
Right. So there is the old notes, the 500 rupee notes and the 1,000 rupee notes. People should be able to take these notes. Without fear, in the confidence that they will be able to deposit them in a bank.
Yes.
Right?
Yeah.
But this is not properly understood by everybody at this point. And nobody is touching this old currency. So it is causing, in some cases, problems that shouldn't arise.
Yeah.
But there you have it. So I don't have a solution. I don't even know the exact extent of this problem. I'm just sharing with you anecdotes.
No, I agree with you. In fact,
I hear them.
One of my colleagues was covering Crawford Market, and there was genuine panic. She thought that loaders and coolies, hamals, will perhaps not be paid in a couple of days. And, then there is a genuine human problem. But do you think this will pass?
Yeah.
The moment we get to know that the banks will give you cash when they want, or the ATMs will dispense when you want, this hoarding will come to a standstill, will stop. So do you think these kinds of human stress problems of daily wage is a matter of a week, perhaps, not longer? Or do you think even this has a problem of propensity to erupt?
Latha, I'd be lying to you if I said that I know how this will pan out. This is totally unprecedented. The scale of this is just mind-boggling. But I would have thought, again, common sense would suggest that with very systematic and stepped-up communication from government, in particular, and the banks, that this sense of panic will begin to die down. A. B. As the RBI and banks are able to overcome with very serious effort the logistical challenges of making new denominations and 100 rupee denominated notes more widely available, that this problem will begin to abate. Now, the logistical challenges of making currency available are not insignificant.
Yeah, I heard so, sir. I heard so from a lot of bankers, but they also said that by Sunday, the vans were coming in perhaps 3 or 4 times a day, at least in Mumbai branches. Obviously, in far-flung branches, Mrs. Bhattacharya was saying that they are making available, creative ways of reaching the currency. I take your point. Let me drill it down to numbers for IDFC Bank itself. You have, 6%, I think, as NPAs. Would you say that this dislocation will create a larger number of NPAs in the second half of FY17?
No, for us, I don't think it's a meaningful impact because the bulk of our NPAs are to do with a legacy book.
Absolutely.
That is all infrastructure. The 78% of our outstanding still remains large corporate and infrastructure. I don't think that this is going to affect that portfolio.
Okay.
It could be that some of our emerging microfinance portfolio gets affected by this.
Okay.
And I really don't know to what extent that might be the case, but the numbers are still, fortunately for us, relatively small. But those banks that have very large books, that are focused on business banking and low-end SMEs, if this process of pain lasts several weeks, they might begin to see some stress that will add to numbers. But I'm afraid this is just a price that we will have to pay. We'll just have to swallow this bitter pill and work very hard to reduce the transitional pain, because we know that once we come out of this tunnel, this step has the potential to be just take us to the next level.
Absolutely.
In terms of formalizing the financial system.
Actually,
and improving
my last question is exactly on that. Mr. Lall, some time back we had, I think, Chris Wood telling us that he wouldn't be surprised if there is a 1 percentage point rate cut even at the policy level. How much do you think lending rates can fall, and will that be seminal enough to kickstart the economy?
So, on a macro basis, my sense is that the prospects for rate cuts are now much more real.
And their transmission, you think?
Leaving aside what might be happening internationally, that's a complication, because if US rate starts rising, then that's a layer of complication. Let's leave aside for the purpose of this conversation.
Yeah.
But given this dramatic event of demonetization and the volumes of deposits that are likely and liquidity that is likely to now come into the banking system, I suspect that we are likely to see more substantial rate cuts than we were imagining 6 months ago. The knock-on effects of that are very powerful. Okay.
Yeah.
They're very powerful because in a more formal economy, the demand for working capital will increase across the board. But the cost of that will be lower thanks to lower interest rates. It will also, ironically and interestingly, make the importance of CASA less in the economy, right?
That's right.
And that'd be a huge plus for a young bank like ourselves.
All right, on that positive note, Mr. Rajiv Lall, thank you very much for joining me with the details. Have a great conference out there.